we have got to take a look to see what has happened to us in the markets and also what could be coming up for us in the markets. I am Dr. Stock, Doctor of Education, and if you have pennies, dimes, quarters, but no other coins, your name might be Nicholas. We got those darn GDP numbers, and I said in my previous videos that they would not be treating us well if they were up above the expectation. And man, oh man, I'll tell you what, if this was any other point in time where we didn't go through a Fed quantitative tightening cycle, we would be astounded and excited to have such results. But we are in the environment that we're in. So we're going to look at the markets, and we're going to also take a look at the results and the upcoming catalysts that we have in the market. So stick around for this video, and I will also be telling you where you can see my buys and sells for how I'm playing this market, how you can get access to my options course, and then also about the free stocks from Moomoo. In the meantime, let's get over to trading economics, and what we're going to look at is what we got for GDP today. So GDP, just in case you were unaware, came in at 4.9%. The expectation, the consensus was 4.3, which I think last time I looked was 4.1, and that just kept creeping up, and we beat it anyway. Now, it is possible that we get downward revisions coming for that by the time that we get the second estimate and then the final estimate on top of that, but the advanced estimate is the one that matters, and that is the one that hit us, and it gives exactly what we didn't want to see. I said it was going to be downward pressure on the markets, and it was. So that absolutely not great for us. What do we have coming up from there? Well, tomorrow we have personal income and outlays, and those personal income and outlays include the PCE, which is the inflation measure that the Fed absolutely likes to look at, so we want to be paying attention to that. Personal income expected to be 0.4. If that comes in lower, that's good. We can see a reprieve in the markets. Personal spending, 0.5% consensus. If that comes in lower, that can be good for markets. If they come in those levels, it's going to be mixed mismatch. We've had a lot of sell-off. Maybe we possibly see a little bit of levity. It's going to be a cliffhanger ending to end the week, so be watchful for that. And so that would be coming up with personal income and outlays. Notice we have a Fed speech at 9 a.m. That can also be very crucial for us. Let's go over to the CME Fed Watch tool. So if we look to see what has happened, not much as far as November goes from GDP. If we go out to December to look and see what we have, right now for that rate hike, 19%. We were at 29, almost 30%. So it actually got less likely today than it was yesterday. So that's a good thing. We also got less of a likelihood that we were actually going to see a rate cut in December. We were at 1.7. Now we're down to 0.6. Let's take a look at January, and then we'll move on from there over to the catalysts that are up and coming for us. When we go to January, we're now down to a 0.5% chance of a cut from where we currently stand right now. And we have actually moved down from a rate hike, and it looks like we also moved down from 2 rate hikes of 25 basis points apiece. So it's looking like holding really steady, pegging at that 5.25 to 5.55% for the federal funds rate. So we want to be watchful for that. So now what's coming up for us? So let's scroll a little bit and see what happens to us next week in the markets. So starting with Monday, Dallas Fed manufacturing can tell us about manufacturing contraction if we're still experiencing it, which is expected right now. And then we get news about employment, and then Redbook is going to be a big one to watch because that has been coming in hot. We want that to stay below 7% is actually what we're looking for. It's a pretty volatile measure. It's been kind of elevated recently. It should be up and down, and it's only been up, so be on the watch for that Redbook number that we get. Consumer confidence is going to be huge for us at 10 a.m. We want to see what that looks like. Lower numbers for consumer confidence are going to be downward pressure for the markets, and that's Tuesday, October the 31st. Hopefully it's not a scary Halloween day for us as we watch that. Moving into Wednesday. Wednesday, we get manufacturing from ISM. We also get JOLTS job openings. So Wednesday is going to be a huge catalyst. That's November the 1st coming up for us in the market. So we could possibly see a little bit of reprieve, maybe Monday, Tuesday, but then Wednesday comes in. If this number comes in that there's a lot of job openings, and we also have a very tight labor market, and there's even more openings, and the strength of the economy just keeps on rolling, then that really puts more pressure on the Fed, which normally the strong GDP would be great for us. Normally the strong job openings would be good for us. The low unemployment would be good for us. And it is good for the economy, but for right now, it's not so great because of what the Fed is doing through their quantitative tightening cycle, and that is horrible for us. But hopefully there's some sunshine coming out the other side. We will continue to play the markets. I'll continue to put out my short and long positions as I see the different fluctuations come out in the markets. So I did close out my short hedge position today, by the way. I'd have to check the percentage on that one. I think, don't quote me on this one right now, I'll get that actual number for you, but I think it was around 30%. And I also closed out the iron condor play that I did on Meta, by the way, and that one was $192 profit from the $223 that I got paid originally. So I spent $31 to buy that to close it. So that has been closed as well. So that was a nice little profit. My long positions today, man, oh man, did they get hit along with everybody else's long positions. I also did, by the way, close out my target call that I had for a 10% gain, which is really nice, especially considering all the red that we've seen. So maybe some of those safety plays, some of those beaten down stocks are where we need to look for that value. Fed interest rate decision. What do we got here? Ooh, November 1st. The Fed, good old Fed. We most definitely want to pay attention. Most likely, it's more about what Jerome Powell says at 2:30. So we could see some serious depression in the market right around that 1:30 time. A nice little V shape in the market. So all you day traders out there, I'm sure you'll be chomping at the bits to get your day trades in and all those put options going and then swinging them around to calls. We'll see if it actually does happen to work that way. Moving into Thursday, challenger job cuts, more initial jobless claims, and then we get non-farm payrolls coming up, and non-farm is going to be huge for us along with the unemployment rate. So lots of things coming up at the beginning of November. Make sure that you're watching for them. Next week is a big week, which leads me to the technical analysis when we look at the charts. So let me bring that down and put this up. Here we're looking at the SPY on the daily chart. Big thing, down below the 200 yesterday. Another drop down below the 200 today. I said that was a bearish signal, and man, oh man, it once again didn't disappoint, but we have 2 points of confluence here at least when we look at the SPY, and you can see that we have further room for more support coming down. This white is a long-term trend line that we have here, long-term support that we're looking at, and we are at the bottom of our bearish channel that we're in right now. It's possible that we get a reprieve. Moving back up to the 200 day at this point in time would be like almost a 2% gain in the S&P tomorrow. I don't know that's the cliffhanger ending that we get. So where do we go from here? Do we bounce back up? Where do we go if we do bounce back up? I think 418 is about where we could see that bounce up tomorrow. So that would actually still be pretty good from where we're at right now. We'd see like a percent to a percent and a quarter in the S&P if we get that bounce for that cliffhanger ending. I think otherwise we push down through the support and maybe that we see down about 410, so another 0.75%. to bring us down to where we catch a little bit more of this historic support that comes around in here. So 0.75% down up to 1.25% up. I think that whatever it lands us, I don't think that's going to be a strong green day that's going to be absolutely incredible, amazing. Maybe if we get really, really strong, convincing results from personal income and outlays, but otherwise, I don't know what that catalyst would be. We do have Amazon earnings out, and we are still, I think at this point, waiting for that earnings call to hit. Let's go over to the Qs real quick. Qs dropping down out of its bearish trend that it was on. It's still above the 200 day, which is good for us though. Big Tech still hanging on some of the other stocks that we have out there. Big Tech has not been reporting horrible earnings. So they've been saying that there's been a little bit of uncertainty coming for them, some increased cost coming their way from Google and Meta. Microsoft out there giving us very strong reports for their going up initially. I don't know where they closed today. I'd have to go back and check. Where does our cliffhanger ending go? I think back up to this trend line, which for today we closed at 343. So maybe we go back up to about the 349 to 350 mark. So that's $6 to $7 up from where we're at right now. So 1.5% to 2% to the upside. Real cliffhanger ending for the Qs, by the way, would bring us down to about 338, which would be about 1.5% to the downside. So we'll say 1.5% either way in the Qs is what we could be looking for that cliffhanger ending for the week, because the stock market has a way of putting us at some important value in the markets as we look at those. So let's take a quick stop by Amazon here. So AMZN, see what it's doing in the after hours here. And we'll go down to the 1 hour chart. And man, this thing's all over the place. And I'll tell you, I did put out another Iron Condor trade on this one. It's currently right around 119. It did in the after hours go as high as 126, which still puts me at my full profit amount for the Iron Condor. So let's go back out to the daily chart. I'll tell you the exact values that I used for this. So what I did was I sold to open a put and a call. So those would be the inside part of the body of the Iron Condor, if you want to talk about it that way. And the call was at $130 strike for tomorrow as an expiration, because I do want that to expire worthless, because that's how I keep all the money that I got paid for that. And then on the downside of that, 110 was the other edge of that body, beginning of the wing on that Iron Condor that you want to talk about. So those are the values that I used. And I think I went with 109 is where I bought the call. Where I bought the put, and 131 for where I bought the call for the ends of those wings on that Iron Condor. So it's one that has sort of a steep risk to reward ratio, where it's I think I did at 105 is what I got for the premium for that, which, isn't a huge amount, but it's still pretty good. The risk that I would take on for that, though, I think is like 2.5 times that amount. That is right around $250. Possible loss. That's only if it goes outside 110. If it drops below 110, I'm in trouble. If it goes up above 130, I'm in trouble. And that's by tomorrow for expiration. I think that Iron Condor play is going to pay off, though. So let's go do one more thing before we jump out of this and we talk about just a little bit more. And that's the U.S. 10-year Treasury yield. And when we go here, this is actually really good news for us, guys. And this is one thing that makes me think that it is possible that we do see a bit of reprieve in tomorrow's market, that we actually sooner go to the upside. And that one of those things that makes me think that it's possible that we see it is the bond yields, that we actually have a bit of a double top. Maybe you can argue triple top. And I mean, really, you can change the number of hours to change the look of what we're dealing with, that it's still, okay, fine, we'll go with double or triple top, that we can see maybe some weird, I'd say double or triple top would be the best way to call this, and that we've dropped down through. Where do we drop down to? 4.847. Guys, the value that we absolutely, I can't be more clear about this, the value that we need to cross down below in the U.S. 10-year Treasury yield is 4.8%. If we drop down below 4.8%, then we have room down to 4.7. But the thing is that we bounced real hard off that, went back up almost to 5% for a third time. But the good news is that we got rejected. So how do I see it looking for tomorrow to close the market week? I think there's a strong possibility after all the selling that we've seen. The GDP's not been priced in, coming in at 4.9. We see from the bond market what they expect the Fed to do. I think tomorrow that we could get that bounce. I have some small hedges possible set up ready to go to push us back that other way. I'll put out my SoFi video for tomorrow morning. And so for that one, I'll also tell you about the plays that I've made there. Matter of fact, let's do a bonus in this one. I'll tell you straight up that I did make a bullish play on that one, but I did not put out significant risk capital on it because the market environment that we're in right now, that good is seen as sort of bad by the market, and then bad is even worse from there. So that's something that most definitely worth considering as we take a look at the markets. But from the bond yield, from the significant sell-off that we saw, I think that there is a little bit of reprieve to be had, especially before we get those job numbers for next week. Although I think because of the catalyst that we have next week, it's not necessarily going to be a very strong start to the market. I think there's going to be a lot of worry. There's going to be a lot of fear. That could be wrong because maybe we retrace a bit up from where we've seen so far. And now, mind you, before any sort of big sell-off or death cross, such as in the S&P, there's usually a return to the underside of the 200-day where we get rejected. So I don't know where we start to turn around. We don't have strong signs that we are at a bottom yet, that we are going to turn around. I just think at this point, without a lot of evidence, that there is a good possibility for some reprieve to close the week where we end things at a slightly positive note from the base that we put in today. And then next week, at this point in time, we're going to have to wait until tomorrow's market to really give further commentary on next week. The last thing, guys, if you want to see all my buys and sells, check out the Patreon through the Discord. Meet my community members over there. They're absolutely incredible and astounding, and that's where I put all my buys and sells, is through that Discord. You can talk to me and my community members throughout the trading day, and then I also have my options course over there if you want to learn how to amplify your portfolio through the power of options. You can use that course to help get you started, and then also if you want to add to your portfolio, you can get this trading platform of Moomoo. You can get that link down in the description as well. The 16 free stocks come from making a deposit of $100 or more. $100 gets you 5 free stocks with a free share of SoFi, earnings Monday before the market opens. $1,000 deposit gets you 15 free stocks, still with that free share of SoFi. Thank you guys for watching this video. I really do appreciate it. Don't forget about that Patreon link. Come on over and join us. We'd love to have you over there. And then also don't forget about your free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.